Howdy, swings. Today's CPI release came out in line with market expectations, but as predicted in yesterday's video, the market experienced a bear trap with an early dip followed by a higher close. However, the dip was smaller and shorter-lived than expected. Will the market experience another similar downturn, or will it continue to rise? Let's take a look at Fullhapce daily swing market forecast to get some answers. Swing trader's friend, Fullhapce Intelligence presents August 14th Wall Street market forecast. Daily market moves. The market was down early in the morning, but bounced back quickly to end the day in the green. It is notable that VIX index went down by 20% in this week. S&P 500, 5,455.21, 0.38% up. Dow Jones, 40,008.39, 0.61% up. Nasdaq, 17,192.6, 0.03% up. Russell 2000, 2090.7, minus 0.68% down. 10-year bond interest rate, 3.82, minus 0.83% down. VIX index, 16.19, minus 10.65% down. Here is daily sector performance. Some areas performed well, including consumer staples, auto insurers, brokers, certain banks, security software, AI-related stocks, paper/packaging, energy, railroads, and some parts of healthcare. Semiconductor stocks and those related to electric vehicles also struggled. Additionally, sectors like restaurants/fast food, consumer discretionary, home builders, steel, and media showed weaker performance. Here are the reasons. Stocks saw slight increases after the Consumer Price Index, CPI, suggested that the Federal Reserve might start cutting interest rates in September. It's still uncertain whether the Fed will cut rates by 0.25% or 0.5%, and upcoming events might provide more clarity. Geopolitical tensions have increased recently in the Middle East and between Ukraine and Russia, but the market seems to be handling these risks fairly well. In Washington, Kamala Harris is gaining momentum in the polls, showing better results compared to Trump both nationally and in important swing states. Here are things to consider. The U.S. Consumer Price Index, CPI, for July met expectations, suggesting that the Federal Reserve may cut interest rates next month. The Cass Freight Index showed a 3% increase in July shipments, rebounding from a 4-month decline. Mortgage refinancing is on the rise due to lower interest rates, which could give consumers more money to spend. Foxconn reported solid earnings, which could be a positive sign for AI demand and could affect expectations for NVIDIA's earnings at the end of August. Strong consumer goods sales suggest a degree of confidence in consumer spending. Here is daily market forecast for swings. The market's potential as shown in the weekly market forecast was strong, which propelled the cows to win the fight against the bears today. On the other hand, the market's daily downside potential is now stronger, so today's gains were stopped at the S&P 450 resistance level, showing a new balance between the bulls and bears. However, according to our calculations, the market's daily volatility shows that the market could move higher as it leaves the risk zone. In conclusion, the market has already entered a mini rally and is likely to continue to move higher, but the daily downside potential has strengthened, so we may see paroxysmal short-term plunges in the coming days. In the near term, the outlook for stocks looks somewhat positive due to strong corporate earnings and expectations of monetary policy easing by the Federal. How economic growth develops in the coming weeks and months will be crucial in determining whether the economy soft lands. Current data suggests a slowdown rather than a severe downturn, and low inflation could give the Fed room to cut interest rates. But weakening demand is already putting pressure on corporate profits. Companies can respond by cutting costs, but their flexibility may be limited if the economy faces greater challenges. Here is devil's advocate. The opposing scenario is when there has been a large plunge, a few aftershocks on the bounce, and now we are entering a downtrend again. In this case, the pullback can be an opportunity for bullish buyers to buy more. The rationale for this scenario is as follows. The market has recovered too quickly recently, as evidenced by the VIX index plunging from 60 to 16 in 7 days. CPI data released today shows that inflation is still a concern. Copper prices could rise on the back of a major labor strike, and recent steel industry news has not been positive. The World Health Organization has once again declared an international health emergency due to smallpox. While the contrarian scenario has merit, we believe that if there is a dip, it will be small, of 1 or 2 days, and we have already mentioned this earlier. Nevertheless, viewers need to be wary of the concerns raised by the naysayers. Here is the conclusion. The bullish potential of the weekly market is strong, while the bearish potential of the daily market is strong. We expect that the rally has already started and that 1 to 2 short pullback attempts are coming in the next few days. Swing traders may be wise to stay positive and participate in the rally, but hedge a bit more on days with bad forecasts. At this moment, the next risky point is S&P 5550 to 5600. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.